may do well or not, sir. For that reason I call you, sir.
Okay.
And Access seems to be doing well. So, shall I have to hold and I have to continue for these two schemes, or I have to cancel the SIP in Reliance Tax Saver and I have to go investing in some other schemes, sir? Tell me, sir.
Okay, he wants to know whether Reliance Tax Saver will continue to hold.
Yes, Reliance Tax Saver has not been doing well, although it happens to be a top quartile scheme over 5-year CAGR as well as 10-year CAGR. It had some mid cap and small cap exposure over the years, and mid caps and small caps, obviously, as we had discussed previous part of the show, they are not doing well. That's why you are right. If you stay invested for another 3 years, which is what I heard from you. If you have SIP mode, you can certainly stay invested. This scheme does very well in bull runs. This has been one of the chart busters during 2014, 2016 years, and probably that is the reason why 3 years back the scheme selection was done over here. If you simply cannot stomach the kind of volatility, and 40 months is a decent period that this gentleman has stayed invested via SIPs. If you do not really have patience anymore to stay, you can change over. But currently the scheme has also shifted its portfolio from a mid cap small cap allocation to 80-85% into large caps.
Okay.
So there is no reason. The portfolio reallocation has been done, and if you have 3 more years horizon ahead of you, you can choose to remain invested as well. Axis happens to be a good choice. Axis is #1 scheme over 5 years CAGR. It still is a good scheme. You can stay invested in Axis as well.
Okay, you can stay invested.
Well, hello and welcome to the special coverage of Tata Steel results. The results are out and they are flashing right there at the bottom of the screen. The net profit again basically has come out at 1950 crores. Also again revenue the more numbers actually are going to come, almost 37,000 crore. So revenue again basically looks to be slightly higher than the estimate here. I'm just opening the press release here, but in terms of the headline numbers, again it looks to be a sort of a good set of numbers from Tata Steel here. Now, what actually should be important to watch here is that what is sort of EBITDA and EBITDA margins, again those actually have come. Now, in terms of what is the expectation, again the revenue was expected to be roughly around 35,655 crores. That was the expectation on revenue here. And also again the profit was expected at 1950 crores and the EBITDA was expected roughly around 6678 crores. And what the number actually we are getting at present is the revenue again has come slightly higher, and it's almost I should say a slightly 3 to 4% beat on the revenue. Again that's the number actually coming at present on the revenue front here. In terms of net profit, again the console numbers is what again we should basically be watching out here, and what basically should be looking like on a console basis. Now in terms of, there are a couple of moving factors here. What the sort of realization is on the Europe division, and also what the realization on the Indian division. Again those actually are the factors which are worth watching here. Now on the face of it, in terms of as the revenue numbers, those are going to flash. The console number is right there, 1954 crores. The expectation was of 3396 crores. So this definitely looks way below what the street was expecting and working with here. So on a console net profit basis, definitely it's a miss on street estimate, and it's a miss by roughly 1400 crores, and that again could be a 40% miss, about 37 to 40% miss on a profit estimate here. Revenue 3 to 4% beat. So again that implies again it's a big sort of miss coming on EBITDA and EBITDA margins also here. So results are looking weak because again the profits actually have missed the sort of street estimates here. We have with us now Avinash Gurasakar, the head of research of Joindre Capital Services. Avinash, welcome to the show. What's the first reaction? It appears revenue is a 3 to 4% beat on estimates, but the consolidated net profit, it actually is a huge miss again, only 1950 crores versus the estimate, an average estimate on the street of roughly 3396 crores. It looks like almost a 35 to 40% miss on the profit estimate here.
I think Piyush, I think numbers definitely seem a little miss as far as both the top line and the bottom line is concerned. We were working with an estimate of close to about 2800 to 2850 crores, and I think clearly one would have to see whether this has got some element of one-time hit, or whether it is the operating margins which have actually got hit. Operating margins were expected to be a tad above, because I think the realizations were actually expected to be better. So I think one would like to know what has been the realization kind of miss, if at all, if the damage has been done at the operating level. But I think one needs to see the operating profit number also, and then look at the bottom line number. But looking at the number, at least on the face of it, I think these numbers definitely look disappointing.
Right. Avinash, what was your own expectation in terms of EBITDA and the margin trends across the India and Europe geographies? It was expected India again should be posting some solid margin expansions there. Now, taking a look at the EBITDA margins, is it disappointment primarily coming from the European division?
Yeah, I think we were clearly looking at a consolidated, EBITDA of roughly about close to about 6,900 to 6,950 crores. So I think clearly overall EBITDA margins, if they're anywhere below say 80-odd%, I would believe that the miss could possibly be on the operating profit side. If you could, let me know what's the operating EBITDA both from the European as well as the Indian operations. Clearly, our sense is that this number itself, if it has missed out on the analyst estimate, then I think the bottom line miss is definitely something which the market would not take very positively, because clearly I think on the upper side we were looking at most analysts were talking about 3,000 crores of bottom line. Even with a number of close to 80-odd%, I think clearly the bottom line miss is something which the street would like to know whether this is these some one-off items or whether it's a realization miss from the top line and which got translated into a lower EBITDA number.
Right, Avinash, I have some more numbers now. The press release again for the profit loss statement also here. Let me go through some numbers here again. Those actually are going to present some interesting cases here. Now, revenue again is 37,000, as again we've already highlighted. The numbers are right there at the bottom of the screen. That's again basically, as I was just telling, again 3 to 4% beat on the estimates here. Other income, no major bump up here. In fact, other income has 347 crores, and that again roughly is 190 crores higher than the last year. So again, still it's a higher other income. If I take a look in terms of is there any major exceptional income here, again we actually are not getting any sort of major exceptional losses here. 343 crores is the exceptional loss amount here, but still again that basically is not worthwhile to justify this sort of profit miss here. Now, in terms of EBITDA, again as again basically we have those sort of headline numbers here. Also the volumes, again those actually have grown by roughly 8% in terms of standalone deliveries. So again, that basically again should be meeting the estimates of the street here. A tad almost 1 or 2% again miss on the standalone volume that's coming from the Indian business here. Now, in terms of consolidated EBITDA, again that basically is being reported as 6559 crores. The estimate again basically was 6678 crores. So that again is a 3% miss on EBITDA, and thereby again there is a miss on EBITDA margin also. So a miss on EBITDA margin. And also again, if I'm just taking a look into basically what should be the implied sort of volume growth here, and it appears again the European operations, the volume growth is roughly 2%, and this basically also implies that despite a 2% volume growth, there is a sharp decline in the realizations here. Avinash, coming back to you, 7 to 8% volume growth. The exact number for the volume growth is 7.9% for Indian division. For European division, 1.9% volume growth. The expectation for Indian volumes was roughly 10 to 11%. What's your own sense on the volumes for Tata Steel?
I think both on the domestic volume side as well as on the European side, I think the number has been slightly below the street expectations. We were working at roughly about 10% volume growth for the domestic market, and European volume growth of roughly about 2% has come in at probably lower realizations, because we have seen that despite a marginal 2% uptick on the volume growth for Europe, I think margins from the European business have been not been very encouraging. So I think both combination of lower volume and lower selling prices on the European side and a little bit disappointing volume growth in the Indian operations have actually resulted in a lower EBITDA kind of growth, because EBITDA operationally was expected around 67 to 6800 crores. I think the miss has been rightly at the operating level, and if there are no exceptions in these numbers, then it clearly means that the performance on an operational level basis has been much below than what the state expected.
Right, as you were just saying, there is a 325 crores exceptional charge here, definitely Avinash, because it includes provision for additional interest on differential royalty and coal. 335 crores, if I adjust for that also, then also again it's a miss of roughly 1000 crores. It's still again a substantial miss here. And as we have just talked about, we are just highlighting in terms of realization trends also here. So Avinash, if we summarize in terms of the last inclusion of the results here, because I have the segmental details also, and I'm just looking into details, it tells me in terms of EBITDA here, EBITDA Europe is roughly 1666 crores, EBITDA India is roughly 5118 crores, and also Bhushan Steel, again there is a 61 crores contribution coming in EBITDA from there. Southeast Asia again remains positive, and also a mild sort of uptick there. So if we conclude, Avinash, and if I want to ask you, revenue basically is slightly higher, 2 to 3% estimate higher. Volumes again we can say a slight below what the street was working with. So there is not a major sort of disappointment coming on realizations here. But in terms of EBITDA margins, how the stock is going to open tomorrow after such a huge miss on profit?
I think market will definitely be disappointed with this overall set of performance. I think clearly you could see a little disappointment on the stock tomorrow. But I think what commentary the management gives, I think that would also be very important, because clearly how the European business actually grows and what kind of margins expansion happens on the European market side plus volume growth in the domestic market side would be key triggers to watch. But overall, tomorrow you could see a little bit of softening for Tata Steel, considering the fact that the domestic market was supposed to be a bigger contributor in terms of profit, and which has clearly not happened. So I think operating level performance has been hit both on the domestic as well as on the European side. So tomorrow probably in the first half you could see a little bit of sell-off on the stock, and I think clearly what management commentary comes on the volume growth, especially for the domestic and the European market in the forthcoming quarters, is going to be very keenly watched.
Avinash, thanks a lot as always for helping us decipher the results. Jatin Damania, AVP Kotak Secretary, is also joining us. Jatin, the press conference is going to start very soon, but what's your take? What's your overall take on the Tata Steel results?
Definitely numbers are below estimate. If you look, we were estimating somewhere around 30 billions of profit. So on the revenue front, definitely the stock company has done quite well. As against 356, they did 372. But on the operating level and on the bottom line, it's below estimates.
Right, and Jatin, in your perception, looking at the EBITDA margin trends, fair to say that from where the disappointment would be coming? Is it the European division or the Indian division?
So definitely, I guess the European business would have done could have done much better. And on the domestic front, we'll have to watch on the cooking and the raw material cost, because definitely there was some amount of the rise in the input cost in the previous quarter. But however, if you look at the current quarter, we are expecting 17,900 rupees EBITDA per ton. So we will be watching closely on the performance of both domestic as well as on the European front.
Right, because Jatin, even if I'm looking at the cost trend, there is no major spike in the interest cost. Depreciation has shown a mild uptick of 50 crores. Other expenses again hardly remain the same here. So again, disappointment, and in fact there was an uptick in other income. So it's all coming operationally. Even in fact there is an exceptional income here. How the stock should be opening, or is it sufficient for you to change your estimates?
So definitely the stock will open on the lower end. Definitely the numbers are on the operational level, it's below the estimate, whether ours or the consumer estimate. So we will be looking at the couple of points in the conference call which is scheduled today, and post that we will take the call regarding our estimates.
Right. So Jatin, if I want to ask you, and one question here is that June actually was showing a relatively softer trend, and then actually we heard that again in July the prices started inching higher. In September the new cargoes actually, new contracts actually are also suggesting some sort of uptick expectation in steel pricing. That's how the dealers are saying. What's your sense how the September quarter is looking like?
So definitely September quarter, I mean, if you look at last 15-20 days, prices have gone up on as compared to what we have seen in the month of July. So definitely trends look upward.
Marks, after that we'll have.
Right, Jatin, just hold on to your thoughts. The press conference started, and let's cut into the press conference now.
And we will have this for the next 45 minutes. Thank you very much for coming over. I'll hand it over to Mr. Narendran.
Thanks, Fulvin. We are not going to make the presentation. I think the presentation is already uploaded. We'll just make a few comments, and then we're happy to deal with any questions that there are. So just a few comments on the macroeconomy, and then on Tata Steel. The steel demand growth in China has been strong at 8% for the first half year, whereas the production grew by about 6%. And this is in line with expectations. And while Chinese exports grew in the June 18 quarter, partly due to the higher production and weaker yuan, exports in July have come down and are currently at an annualized rate of about 70 million tons. The international steel prices did soften a bit in the midst of the ongoing trade frictions, and also correlated with the softness in the raw material prices. So the spreads remained resilient, and it reflected the strong underlying demand. On increasing tariff actions, elevated oil prices and weakening currencies, there are some key risks which we continue to watch out for. And coming to India, the domestic prices have remained buoyant, driven by accelerated economic activities. And despite what is a seasonally weaker period, India's turned a net importer as strong domestic prices led to lower exports, while trade actions resulted in higher imports. We believe the Indian steel markets will remain encouraging as steel-using sectors continue to demonstrate strong growth. The EU steel demand was also strong, though UK continued to suffer due to the uncertainty over Brexit, and the Southeast Asian demand remains sluggish with continued weakness in the construction sector. However, the spreads have seen an improvement because of the fall in scrap prices. As far as the Tata Steel performance is concerned, Tata Steel has delivered a strong performance across all geographies on the back of better realizations and buoyant spreads. Our India operations performed extremely well, delivering higher growth than the broader market. And key segments such as the automotive business, the branded business, continue to perform very strongly. The European operations also saw stronger profitability with an improvement in spreads as well as in operational performance. The Southeast Asian operations delivered an improvement in EBITDA and maintained volumes despite weaker markets. We continue to progress on our strategy of expanding our footprint in India. Our Kalinganagar Phase 2 expansion is progressing well, with work already started on the cold rolling mill complex, which will help in enriching our product mix and optimizing cash flows. The other milestone in our growth plans is the acquisition of Bhushan Steel during the quarter. I'm very happy to say that the integration process is proceeding well, and all key stakeholders have been very supportive. We are confident that this asset will add significant value to our portfolio. On June 30th, we also signed the binding agreements with ThyssenKrupp to form a 50-50 joint venture in Europe, and we are now working to secure all the relevant regulatory approvals, and we expect to complete the JV formation by the end of this financial year. With this, I will hand over to Kaushik to walk you through our financial performance.
Thank you, Naren, and good evening, ladies and gentlemen. I would like to share some of the financial highlights. Our financial performance was very strong this quarter across all our operations. Our group revenue witnessed a growth of about 22% year-on-year, primarily driven by improved deliveries, better realizations, and better operating performance across geographies. I would like to highlight that the underlying increase was much higher at about 28% as compared to the Q1 financial year 2018. It included the excise duty, which was removed with effect from July 1st, 2017. So that's from a comparative point of view. Our quarterly consolidated EBITDA registered a 33% year-on-year growth and increased to 6,559 crores with an EBITDA margin of about 17.3%. Revenues from Tata Steel India increased by 14% year-on-year. Again, here the underlying increase was much higher at about 26% if we do the same comparison. The EBITDA in India jumped by about 75% to 5,118 crores, which is a margin of 31.2%, which is quite a standout performance compared to its own past performance as well as in peer group. The EBITDA per ton increased to about 17,252 rupees. During the quarter, we took an exceptional charge of 335 crores in the standalone, primarily on account of provisions for interest on the differential royalty on processed coal. Tata Steel Europe also performed well with an EBITDA of 183 million pounds, which was a Y-on-Y increase of about 21%, and the EBITDA per ton was about 6,800 rupees, which is about 75 pounds per ton. Southeast Asia was also steady with an EBITDA of about 110 crores. The consolidated profit after tax for the quarter nearly doubled to about 1,934 crores on a Y-on-Y basis, which translates into an quarterly EPS of about 16.66 rupees per share. The gross debt during the quarter increased on account of the Bhushan acquisition, as I had explained earlier when we completed the acquisition. The liquidity position, however, of the group remains strong with about 24,984 crores, comprising of 13,000 plus crores in cash and cash equivalent, and almost about 12,000 crores in undrawn lines. Finally, the capital expenditure for the quarter was about 1,900 crores, which included also the initial capex for Kalinganagar Phase 2. With that, I'll end my comments and open up the floor for question and answers.
Sure. So I think what we're saying is globally, if you look at it, the trade flows have been impacted by some of the trade actions being taken, but it has not been as bad as we feared when it was first announced. So overall, there is a little bit of stabilization of trade flows. What has also happened is steel prices in the US has gone up significantly, and which has brought in some sort of a balance because many of the people who are selling into the US continue to do so, right? So as far as China is concerned, the production growth and demand growth in China has been strong for the first 5 months. So hence, the demand grew by 8% and the production grew by 6%. So Chinese exports, while it went up month on month from January to July, January to June has stabilized a bit in July and is currently at about 70 million tons annualized, which is a level I think the world can deal with because China has exported 60, 70 million tons per year for many years. In 2015, it went up to 120 million tons, and that's what created the turmoil, right? As far as India is concerned, India has become a net importer largely because India's exports has dropped. India's imports continue to be at about 500,000 tons a month. Okay, so the exports, which is about 600,000-700,000 tons a month, has now come down to about 400,000 tons a month, and that's largely because Indian domestic demand has been strong and the prices have been good. And even today, if you look at imports coming in, the domestic prices are at a 2,000 to 3,000 rupee better than the import prices if you look at hot rolled coil. So hence the imports are not flooding in. I think it is still at 400,000-500,000 tons a month, which is okay. So I think we are comfortable with that. If you look at the nature of imports, typically majority is usually from Japan and Korea, and a minority is from China over the last couple of years.
So secondly, talking about Bhushan Power and Steel, you had to submit the bids today, but just to understand, I mean, you all had to submit a higher bid after the Supreme Court also said that revised bids will be submitted. So did you take that into account, and what sort of an increase you had to see in that sense?
No, so we don't want to comment on that because technically the process is still open. I think there's time till midnight today to put in bids, so I don't think we want to comment anything just now. We'll wait for the process to complete. Yeah?
Thank you, sir.
Yes, if you look at the two segments which you have highlighted this quarter, automotive and branded products. Automotive has seen a growth of, has contributed 19% and branded products have contributed 33%. But if you to look at the automotive segment per se, it's